Ben Reppond. Welcome to my YouTube broadcast. Today is May 15, 2024. The biggest topic that's out there right now is what is the Fed going to do with interest rates? Are they going to raise them, lower them, or continue to pause? And I would say this to you. Do you really care? Really, that much? What people mostly care about is their portfolio, their stocks or stocks and bond portfolio. What I would say to you is have a portfolio which is designed to not be hurt much in either scenario. So if interest rates go up from here, the Fed raises rates, the overnight rate, or if they lower rates, either way, that you're able to protect yourself or take advantage of either of those moves. For each of you, that means something different. But I would say there's a lot of people, there's plenty of people who say they'll raise them, plenty of people who say they'll lower them, and some in the middle that say nothing, that they won't do either. So my takeaway is be prepared for either scenario. So I'll jump into the dashboards now. The first one is on the major equity indexes and the bond index. So the 6 major indexes that I track, the S&P, the Dow Jones, NASDAQ, Russell 2000, and the 2 foreign indexes, developed markets and emerging markets, and then the long-term government bond, ETF, TLT. So if you look down the top 6 rows, all of them are positive, measured by the green dots on the right. So they are all above their 20, 50, 100, and 200-day moving averages, all of them. Very positive, very bullish. The most negative, of course, is the bonds. The bonds is still below 3 of their moving averages, the long-term government bond, ETF. So, but it eked out a little bit of a gain for the week. So, but on the equity side, very positive. When you take the S&P and break it apart into its 11 major sectors, they are generally speaking very positive. So there's some red dots here and there, but by and large they're positive. So 38 out of 44 of the potential green dots, 38 out of 44 are positive. 6, represented by the red dots, are negative. And those go from left to right, the 20, 50, 100, and 200-day moving averages. And so the ones that have a red dot are energy has 1, consumer discretionary has 1, and telecommunications has 2, and real estate has 2. So that's, everything else is positive through all moving averages, which is a good indicator. For the week, everything was positive except for 1. Consumer discretionary was negative, but everything else positive. Year to date, 8 out of the 11 are positive, 3 are negative. Consumer discretionary barely negative, telecommunications and real estate quite a bit negative. Okay, the Dow Jones, the S&P 500, this is the chart for 24 months. I've taken and expanded this and a number of charts from 18 out to 24 months because it gives you that more complete view looking from a top to a bottom or a bottom to a top. So this shows that from October of 2022 to present, by and large, the S&P 500 has gone up. And it has gone up at a pretty nice trajectory, including this past week. So you can see at the far right of the chart where it ticks up. Each of those weeks where it ticked up pushes it up to where it is right now. This is a candlestick chart, also the S&P 500 over a 9-month period, but it gives you a perspective. So from a candlestick perspective, you can see when it's a blank candlestick, like many of them are, that means that it started that week, started on the low end or lower end and moved up higher at the end of the week. Now, when it's solid red, that means the opposite happened. It started here and moved on down. So those are kind of bearish indicators, and that's mostly what's in this chart. So you can see from the last, say, 3 weeks that the market has clearly been moving up, and from the beginning of this, which goes back to late October of last year, that it has been on definitely a strong upward trajectory. Well, when it came down a month or so ago, it came down and then kind of bounced off of that 20-period moving average and then just moved on up. Again, a very bullish sign. When I put it on a relative strength chart, growth over value, growth is numerator, value is denominator, so when this goes up, it favors growth stocks, or in this case, the growth index or growth ETF, compared to value. When it goes down, it favors value. So it goes up and down a lot, but you can kind of look at where it is currently. Over this entire period, which goes for, 16 or so months, 16, 17 months, you can see, generally speaking, it's moved in an upward direction, which over that period of time is favoring growth stocks. The S&P large companies, the 500 largest companies, compared to the Russell 2000, the 2,000 smallest companies, you can see that large companies, numerator, have been outperforming small companies over that period of time. Again, there's periods where each goes up and down. The long-term government bond, which I talked about earlier, no surprise, is down a lot for the last 4 years. I put 54 months of data on the chart, and you can see that the longer-term, intermediate-term trajectory is down. What that tells you is that interest rates and bond yields have been going up generally, which drives the prices of bonds or bond ETFs down. So when you put this in a 60-40 or 50-50 portfolio to protect against stocks, good luck. It neutralizes the gains and doesn't do much to protect those stocks. So I think in the cycle that we're in, the macro cycle of bond yields and bond prices, which we've been in for a few years now, based on history, we are in for a long period of time of rising bond yields and falling bond prices. And so there will be short bursts where the bond prices will go up or attempt to go up. But when you look at the long-term chart, based on macro patterns, if this follows that pattern, which they have so far, if it does not spell a good picture for traditional portfolios or for those who are holding bonds or bond funds. The dollar continues to rise. So it is on a trajectory, again, generally in an upward direction. This is against other currencies. So if you're looking at the currency of some other country, the dollar is strong against that currency and vice versa. Gold had a very good week. Continues a move up, and you can see the trajectory for about the last 18 months. Definitely an upward pattern. Silver, even more so. Now, silver is more volatile, and so it has had some down moves, but when it goes up, like it did this past week, it goes up pretty sharply. When I put these two on a relative strength chart, again, a lot of up and down, just a lot of up and down. But I guess you could say over a period of a year and a half or so, silver has outperformed gold a little bit. But you put up with a lot of volatility in silver prices. Now, I've told you before, I buy silver, I own silver in the physical form, and I don't look at how much I have, how much it's worth. I just buy it for the purpose of, if I ever needed it, to buy fuel and food, that I have that. And that's the only purpose I buy it. And not how much is it worth or did it go up this week or not. Some people may look at it that way. I personally don't. Bitcoin has been in a decline for about a month or so. This is about a month and a half. And so it has continued its decline so far. We have a Bitcoin strategy. We've been out of Bitcoin quite a bit during this period of time, trying to avoid most of those losses. Volatility. Now, as the market goes up, equity market goes up, which I've shown you, the volatility index, the fear index it's called, goes down. People are less fearful. And so you can see in the last, 2 or 3 weeks? 2 weeks, I think. Look at that first drop to the far right. Amazing. So the fear index is not coming into play. It was going up for a while during that period when the market was pulling back, but quickly corrected. Now down in the $12.50 range. Interesting. Because we've been in an upward trajectory in the market for the last couple of weeks, everything on Asbury Research, the Asbury 6, all indicators, all 6 are positive. The relative performance of assets from Asbury is the following. I'm going to talk about those that are in the last week, the last month, the last quarter. Are they positive or not? So stocks, more positive than bonds. Low volatility, more positive than high volatility. And what that means is the defensive stocks, utilities, consumer staples, healthcare, those types of stocks or indexes have been doing very well during this period of time, and that shows up by low volatility stocks are outperforming high volatility, high beta. Developed markets are in all 3 categories, weekly, monthly, and quarterly, outperforming the U.S. And that's it. So the next one, U.S. versus the world. Now, this is, I try to look at this and look for patterns. You can see that in Asia, South America, and even Europe, there are countries that in all 3 categories are outperforming the U.S. But it is not a complete, clear picture because there are some countries, like in each of those areas, Asia, South America, and Europe, all cases where some are outperforming the U.S., some cases where the U.S. is outperforming them. But I'll mention the ones that are outperforming the U.S. in all 3 categories. Chile, Mexico, Switzerland, Italy, Germany, France, UK, Eurozone, Hong Kong, Taiwan, and China. U.S. is outperforming Brazil, Japan, South Korea, India, Thailand, the Pacific, and New Zealand. I put this chart up. I've been using Switzerland as the proxy. The U.S. has outperformed Switzerland to the degree in the stock market, the S&P 500, outperformed their stock market. The ETF is EWL. And so when put on a relative strength chart, you can see the degree to which the U.S. has outperformed EWL. And that goes from May of last year to May of this year, about a year of U.S. outperformance. Gold and silver. As I showed you, gold and silver have both had a very good week. Gold is now, the spot price is $23.60 as of last Friday, the 10th, and silver $28.15. That's the spot price, to which you need to add the premium, the markup, the commission. and that commission is generally shared between the retailer and the wholesaler. Even though the retailer may collect it, they share that with the wholesaler. The gold went up 2.6%, silver went up 6% over the previous Friday. Gold-silver ratio, gold numerator, silver denominator is 84-1. A monster box of silver has gone, it dropped down to in the 13,000 range and then into the 12,000s. It's now back up to 14,675 for 500 ounces of bullion silver, including the markup. The markup is $1.20, and so the total price per round is $29.35 for 500 and $29.85 for a tube of 20. And these are the prices that my son sells it for, and he provided this information to me. But they're information for you if you want to buy locally, brick and mortar, which is what I recommend, then it gives you some kind of benchmark. You can see what some prices are out there. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below, and thank those of you who have left comments, and some of you even last week leave comments, even on this video, and I appreciate that. Thanks.